liquidity has hit crypto more than anything else. But then we've got OG profit taking we've seen, and you've got this pervasive opinion that the 4-year cycle is what it is, and therefore you must sell in November. I mean, I don't look at it in year-to-year gains. You look at it full cycle gains. Full cycle for me is the business cycle. So it's not necessarily the 4-year Bitcoin cycle. So you look at the gains over the cycle, and over time they compound. And that will probably continue if price action continues like this. So what you've got is this liquidity air pocket that means that there's not as much money around. So the people's propensity to take money off the table is higher. People are nervous. I mean, we've seen the fear index in equities be down at like 8, which is insane considering the market's barely off the highs. So it shows you there's some pervasive sense of fear. And so any movement in the market kind of gets exaggerated very quickly. Somewhere there is some damage that was done during the October the 10th flash crash in crypto. This is the greatest macro trade of all time, and it's not over yet.
Macro investor and Real Vision co-founder Raoul Pal is doubling down on his call for the next great crypto bull run, a rally he believes could last well into 2026. In his latest market breakdown, Pal says all signals point to a massive acceleration point that's turning up as we speak. Historically, this has fueled massive price gains across the entire crypto market. But here's the twist. Pal warns that Bitcoin dominance is topping out, which could set off a rotation into Ethereum and other major altcoins. And ETH, he says, is perfectly positioned. Now institutions and mainstream analysts are floating price targets once believed were impossible. Bitcoin is sitting just over 90,600, still down over 19% in the past month, while Ethereum sits just over 3,000 after a strong run. Pal believes these numbers are just the beginning, with Bitcoin breaking through 120,000 again soon, and ETH heading toward uncharted highs as adoption accelerates. The bottom line, if Pal's liquidity thesis plays out, we're on the edge of phase 3 of the banana zone, a high momentum phase where prices can go parabolic. And for him, crypto remains the single best bet to outpace currency debasement. Let's get right into the latest interview with Raoul Pal, as he gives his latest crypto market outlook and why he says the bull run is only getting started. Drop your comments down below and subscribe if you enjoy the content we do here.
Because if that explains 90% of the price movement of Bitcoin, I need to get that right, because it's the single most dominant factor we've ever had in financial markets. So that's why I spend all of my time thinking about that. And then you overlay on top is my asset allocation right? I.e., is the network that I'm betting on, or the token I'm betting on, is it having the growth that I'm expecting from it? Because if not, you need to have a serious conversation with yourself about, do you have a bag holder bias? Do you have all of those things? So really, I spend my entire time testing those two hypotheses. Is my asset allocation right, and my allocation to the asset class right, which is based on the liquidity thesis.
You have the Tom Lees of the world really go out there and raise billions of dollars. We couldn't even hit all-time highs. We couldn't really break past that for Ethereum, even with this new mechanism of an ETF. And do you sit there and question, maybe there's something else here, that liquidity is there, but prices are not moving in the direction that you want?
Liquidity has been relatively lackluster so far this cycle versus every other cycle. And that's given us relatively lackluster prices. So I don't really have an issue with that. If I overlay US total liquidity on total market cap of crypto minus Bitcoin, it's pretty much identical. So it's telling us liquidity has not gone to new highs yet, so crypto hasn't gone to new highs. And that's total liquidity, not rate of change. So yeah, I don't really, it's not something that's concerning me in that respect, I think.
Yeah.
And also people don't realize that enormous amounts of those ETFs is actually just arbitrages. So they hold the spot and sell the CME futures. Some are doing the perps, not many do the perps, but that trade is gigantic. And that's where a lot of the volume comes from. So the total actual buying by institutions and retail, significant. But again, if we go back to the business cycle, people's free cash flows in the normal world outside of tech have not been great yet.
Right.
And so therefore you can't recycle those cash flows into markets. And so if my thesis on the business cycle is right, we'll see that rise significantly. If it's wrong, we won't. We probably track in real time about 1,000 charts, of which we break down the business cycle to forward indicators, lagging indicators, and indicators that indicate where you are today. So when we look at a whole bunch of different breakdowns and rates of changes and all of that, so the work we do on this is huge, but all the work we do starts with the very top level. Is demographics is the driver of everything. We overlay demographics with things like debt to GDP, labor force participation rate, debt to GDP. All of these things show exactly where the economy is and why over the extended period of time, where trend rates of GDP growth are. Then it shows that all of this excess debt is being financed by liquidity, debasement of currency. Then you come to, okay, where you are on the business cycle, what's forward looking for liquidity, and forward looking liquidity is financial conditions. Financial conditions lead liquidity by about 6 months. And that's giving us a forward-looking lead on that. So we follow that very closely. Our financial conditions index is kind of a regression of the dollar rates and commodities. That leads well. Then we've got the global liquidity. So that's of all the regional liquidities based on both the government liquidity and their M2 numbers plus their bank liquidity. So we map out all of that. Then we map out all of the business cycle elements, which gives us forecasts for where inflation is going to go, where the business cycle itself is going to go, what's driving those. So we do kind of a huge ton of work on that. Then we overlay all the asset prices onto it. So we then look at, okay, what are the asset prices pricing in right now? So gold is pricing in current financial conditions. So it's actually leading versus, let's say, Bitcoin or the ISM. So that we kind of do this kind of multi-work from multi-decade secular trends down to where we are in the business cycle on a regular basis. Generally speaking, I'll profit take towards the end of the cycle. Now, there's always a risk that you don't get that right. So how I try and think about it is to reduce the psychological stress, and maybe your stress is you take what's known as lifestyle chips off. So well before the end of the cycle, when you're sitting in some nice profits, you just force yourself to take some off. And that can fund the lifestyle things that you might need, that you will regret not having later if you miss the cycle, or you decide to run it through the full cycle, through the downside as well, which I've done most times because I prefer to do that. I prefer to buy and add in lows than trying to time it. So lifestyle chips is important. Nobody can dictate when you should take your lifestyle chips off, but you kind of know how your P&L feels to you and how upset you'd be if the cycle had ended then. Mm-hmm. And that's that psychological barrier you need to get through. And lifestyle chips, let's say you take 25% or 30% off, stops regrets. You might have regrets of taking money off early, but it's never the worst thing to have done. Yeah. And if not, if you want to take more off, like I'd take off significantly more risk or tell people to take off more risk once the business cycle's peaking, because that's when returns go down. Will I do that or not? Yeah, I'll probably reduce some risk. Between what's happening in technology and crypto, this is the greatest macro trade of all time, and it's not over yet.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
To try and get too cute with it is hard, and I'm able to stomach the volatility and have the cash flows to do it, so I don't need to do it. But for other people, yeah, just manage that risk because it's not easy.
What is your kind of current thesis on AI?
So because I do so little trading, and I've got all the framework in place for the macro stuff that I do, I spend most of my time thinking, reading, doing, writing about AI. And so this is the greatest discovery humanity will ever make and the last discovery humanity will make. It is not us making the discovery, it is it, right? This is The scaling of intelligence to infinity. Intelligence is what we have been paid our careers for. Our intelligence goes to zero in value over time. Doesn't mean we go to zero in value, but that particular aspect of what we do. So it is the most profoundly disruptive technology the world has ever seen. It is of civilizational level importance. Of the importance, it is the largest game of nations we will ever see played, because nobody can allow the other side to win this. This endlessly scales. And so, I know people didn't like it when Sam Altman talked about government backstops. There is absolutely a backstop. There is not a single way the US or China would allow their industry to not succeed. So that's how big this is. It is economically the most disruptive force we've ever seen. It is a nuclear bomb when it comes to deflation. People just have no comprehension of how big this thing is. Literally everything we do and everything the planet does is basically that. So there is a flywheel here, and the flywheel is very clear. It's energy, compute, intelligence. Creates more energy, more compute, more intelligence. This is the spinning flywheel of all of evolution and everything to do with this technology. So when you're looking at the different elements of the flywheel, we've got NVIDIA and others working on the compute side, but we know that that's not going to get us to the next level. We're going to go to whether it's biological compute or quantum compute or a combination of the two. That's where we're going, and we're seeing signs of that. On the energy side, that's our most pressing need right now. We can manufacture enough chips, but we don't have enough energy because you're going to stress the grids. So again, we go back to this is the most important race of all time to win. So look what China did. But they scaled more solar in 12 months than the entire solar supply of the rest of the world. They're telling you what the fastest source of energy is. The fastest, cheapest source of scaling energy is solar. The most efficient form of energy is nuclear. But nuclear takes, the South Koreans are the fastest to build nuclear plants. They're about 6.5 years. But once you add planning permission and everything else, it's still an 8 or 9 year cycle, right? So if the US says, oh, we're going to just rely on nuclear, we got 9 years, not enough energy. So it has to be solar first. So solar is the only thing that you can scale fast enough. You've got the battery technology to be able to now reduce reliance on the grid. You're not removing from the grid entirely. What you're going to do is take, let's say, 60% of the new energy requirements off grid. The grid will supply the rest. Then it's natural gas. So you can get a natural gas plant up in about 2 years. So natural gas, so solar first, you can get that going in 12 months or less. You've got then natural gas behind it, but you need to be near pipelines. If not, you've got to lay pipelines. Planning permission could take years. So this is why Texas is hyperscaling energy right now, because they've got plenty of sunshine, plenty of natural gas, and low regs.
Pal stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.